接下来是恒基金公司首席市场策略师施耐德为我们分析黄金市场行情和今后的走向。
If I may take a little bit of a victory lap, yes, our last, not just last conversation, but our last several conversations when we've talked about gold, I've been a bull for quite some time. And so the idea of gold as a mirror, if you will, to all of the foundational cracks has really been a very steady and true climbing asset. So what are some of those cracks? We're talking obviously about not just U.S. deficit climbing, but global deficit climbing. We also obviously have issues in the United States with the potential of the Federal Reserve not necessarily being as autonomous as it once had been if Powell leaves and the cabinet changes to what the current administration wants. We have a dollar under some level of threat still, even though it's relatively strong. There's been talk about BRICS getting stronger. We have EU right now having to make a decision about trading for energy with either Russia, India, and China, or with the U.S. And so there's a lot of geopolitics involved in this as well. So that's a long answer to say, unless any of those really resolve, there is no reason to believe that gold has topped. That doesn't mean we can't have corrections here and there, but we just came through a major period of consolidation between 3,300 and 3,500, and we broke out. So now we're trading over 3,600. I think any dips will be shallow. I think the buyers are there. There's more buyers in terms of gold reserves than treasury reserves for the first time in 30 years. And we see no reason why it can't go up to 3,800 or 4,000 or even higher. And so I would say if, let's say you were just waking up to gold and you go, oh my goodness, it's over 3,600. I would probably say at this point it should hold around 35.50. That would be, if it starts to break $50 lower from here, we could get a more serious correction. Perhaps I'd be more conservative. Otherwise, I would say the longer it sits above 3,600, the better the opportunity is to get it at this point, anticipating that we're going to at least go to 37 and, like I said, possibly 38 and eventually 4,000. I think gold is one of the few instruments that you have to watch for resolution in terms of some of these cracks that we were talking about. So is the deficit going to go down? Probably not. Is the interest rates in the United States going to go down artificially because the administration deems it so? And could that be inflationary? Yeah. Are geopolitics going to resolve anytime soon? Probably not. Is the delineation between what's happening with China, India, and Russia versus the U.S. starting to get potentially a little bit more impactful to the price of gold? Yes. So unless, I like to say it in a sort of a cheeky way, unless peace breaks out and we stop spending money and raising the deficit, I cannot imagine a bearish case for gold. So you could buy it. Obviously, you want money management, but yeah, the direction will definitely be up. The patient will be rewarded. Gold futures, if you look on, and that are traded globally, so anybody can open up a futures account and trade it that way. So that's number one. There are certain now places like Robinhood and Coinbase that are allowing you to trade gold futures, or the ETF for gold is GLD. And that's a very substantial, highly liquid ETF. So that's another good way to trade it. So right now, that's trading at 326 while gold is trading at 3,600. So it's not necessarily correlated in price, but it certainly follows the movement of gold.